Hello, this is your daily dose of financial market trends. Investors are betting on a single AI company hitting $2 trillion in valuation, while the Fed weighs whether cooling inflation is real enough to pause rate hikes. Let's break down what's moving markets. Heading into today's session, yesterday's close showed mixed results across the major indexes. The S&P finished at 7,148, up about 0.25%. The Nasdaq gained over 0.5% to close at 26,588, while the Dow slipped just slightly to 53,770. The VIX sat at 1454, and the 10-year Treasury yield held steady at 4.68%. Pretty calm overnight, all things considered. Let's start with IREN, the AI data center play that's absolutely lighting up today. The stock jumped nearly 10% yesterday and reports earnings in 2 weeks, while an 8K filing hit the wire that caught attention across multiple channels. Data center infrastructure keeps being the picks and shovels story of this AI build-out, and IREN is riding that wave as enterprises scramble for compute capacity. With earnings coming up on August 27th, investors are clearly positioning ahead of what they hope will be strong demand signals. Nvidia is back in focus as well, climbing over 3% yesterday with earnings due next week on the 26th. The chipmaker keeps being the bellwether for AI infrastructure spending, and right now it's caught between two macro cross currents: the Fed's rate decision and continued capital flows into AI. Every earnings call from Nvidia has become a referendum on whether this investment cycle has legs or whether we're approaching peak spending. Next week's report will give us critical insight into data center demand and whether hyperscalers are still opening their wallets. Microsoft took a different path, dropping over 2% yesterday even as social chatter around the stock surged dramatically. The company is deeply embedded in the AI story through its OpenAI partnership, and that Anthropic valuation buzz is forcing investors to reassess what reasonable multiples look like across the sector. When a private competitor gets $2 trillion valuation talk, it raises questions about whether public companies are fairly valued or if we're in bubble territory. Microsoft is also exposed to the macro picture through its enterprise business, so rate decisions matter here too. Tesla rounds out our top movers, down about 1.5% yesterday while seeing elevated discussion across social platforms. The EV maker remains sensitive to interest rates since vehicle financing costs directly impact consumer demand, and the September Fed decision is front and center for rate-sensitive growth names. Tesla also carries significant China exposure, which brings us to another developing story around rare earth supply chains that could impact production costs down the line. 3 macro scenarios are shaping market thinking right now. First up is the Federal Reserve's September rate decision. Inflation cooled to 3.4% in July as food and fuel costs came down, but the Fed has made clear that one good reading doesn't automatically mean they're hitting pause. The bull case, sitting at 35% probability, says if the Fed sees this as sustainable progress toward their 2% target and holds rates steady, equity markets rally on lower discount rates with growth stocks leading the way. The bear case at 25% probability says if they hike anyway, citing persistent core inflation and tight labor markets, we see selling pressure across equities as recession fears build and the dollar strengthens. Second is the Anthropic valuation surge that's dominating AI investment conversations. Investors are now talking about this company reaching $2 trillion in value, signaling that capital is still flooding into foundation models and AI infrastructure. The bull scenario at 45% says if Anthropic and peers show clear monetization paths that justify these numbers, tech megacaps and chip makers continue outperforming as enterprise adoption accelerates. The bear case at 20% warns that if revenue disappoints relative to capital deployed, we could see sharp multiple compression across AI-focused names and a pullback in data center spending. Third is China's potential rare earth export controls. prices for niche rare earth elements have jumped on fears of renewed Chinese restrictions that would threaten tech and defense supply chains. The bull path at 30% says if China holds off and Western diversification succeeds, tech manufacturers see reduced cost pressures and stable margins. The bear scenario at 40% warns that if China implements strict quotas, supply chain disruptions cascade through semiconductor and EV production, forcing higher input costs and potential output constraints across the technology sector. Quick look at housing. The 30-year mortgage rate sits at 6.69%, while inventory has climbed to over 9 months of supply, well above the balanced market threshold. Home price growth has slowed to just over 1% year over year. And we're watching whether the Fed's next move finally unlocks the refinancing wave that could shake loose more existing inventory. On the earnings front, it's a quiet week from our tracked list. But remember, Nvidia and Iran both report late next week. So positioning is happening now. 5 things worth watching from here. 1. AI infrastructure names face a validation moment with Nvidia earnings next week that will test whether capital spending remains elevated or if we're hitting a ceiling. 2. Rate-sensitive growth stocks are in a holding pattern until the September Fed decision, and that 3.4% inflation print didn't settle the debate. 3. Valuation discipline matters more when private companies get $2 trillion price tags, while public peers are selling off, so watch for rotation signals. 4. Rare earth supply chain risk is no longer theoretical if China follows through with export controls, creating potential cost pressures for chip and EV manufacturers. 5. Housing market dynamics are shifting with elevated inventory and cooling price growth, so homebuilders and mortgage-dependent plays deserve closer scrutiny. As always, this is educational content, not financial advice. Do your own research and consider your personal situation before making any investment decisions. That's your Market Digest for Thursday, August 13th. We're back tomorrow morning with another rundown. Talk soon.